Friday, May 12th, market analysis, Stan Ehrlich. Good morning. Recording a little bit late today because I wanted to see how these indexes were going to develop, giving it a little bit more time. It's 10:38 California time. We still have 2 hours and 20 minutes almost worth of time before the close. Plenty of time to do basically anything if the market gets very volatile. We have some bearish engulfing sell signals normally in the indexes today. Not what I was expecting. It's very important that if we're going to have a follow-through major breakout continuation for these indexes in the next few days, that we get above, stay above, and close above today's highs, which were on the opening basically. And this is a new format, by the way. I'm going to do things a little bit differently. So I've got a variety of symbols on the left here that I want to look at real quick. Then I go into the futures groups, which have some new signals today. Watch the silver coming up in a moment. Great. So let's zoom in. First of all, recap. It was January 4th of 2022 when the bear market started. It was October 13th of the same year, last fall, when it ended, in my opinion. And we started the new bull market of 2023 in October 13th, to be exact, of 2022. That was the green bullish engulfing at the bottom of the market. Classic major buy signal on my automated ER signals trading system technique, period. So a large bottom formation continued to develop, and we're in progress with that. And I think it's going to last at least to the end of this year, if not more. But we're running into a little problem today. This is a very significant situation. Let's take a look again. And it's in all of the indexes, but there are nuances that are involved, almost always. So this is today on the daily data chart. We open near the high in a resistance area where it's had trouble getting above, staying above in the last month or so. But there's also another thing here. This rally high could be a shoulder. It's a small pattern. That's the head of the formation, and that would be May 1st. And 2 days ago, with the bullish engulfing, it's so far as a rally high, and that could be the last shoulder high on May 10th. Yesterday was an inside day. It went no higher, no lower in the previous day's range. But today, we have a high higher than yesterday's high and a low lower than yesterday's low, making it an outside trading range. And currently we're down really not too much, 212, 216 at the moment, 209. And that in itself is not particularly dramatic, but the fact that it's a bearish engulfing and this bearish formation could be forming now all of a sudden makes a lot of sense. We start getting lower than today's lows. We're going to be closing the lowest closing price in the previous 5 days. There is a gap to close. I'm not going to forget about that. That's very important at 407.40, and we're currently trading at 1008, 410.05. So that's not too much further lower. If the gap is closed, and that's that dark blue zone there, and it starts to go back up again, there'll be no breakout on the top formation. That happens down here at 403.766. Let's call it 403.60. Below that, if it goes straight down there in the next couple of days, you've got a head and shoulder top. It's not big, but it's in good shape. It looks nice. It looks exactly the way it should, etc. So let's back out again. This is important. How far down are we going to go if there's a head and shoulder top? Well, the minimum downside objective would be about 389.8. Call it 390, almost exactly. And remember, there's still a gap to close that would be pulling it below the neckline, and that's at 396. So now I'm getting downside objectives that are lower than 396 because of the gap, which is still there. But I'm getting them down to 390, and that is a 20-point break from here. That's not too small. Will that do any damage to the long-term bull market? Well, we've only got one long-term bull trend line. That's going from October 13th low, of course, and then the low that was made on March 13th. Now, that line would be broken by some amount, not a tremendous, but there's other support levels below and other reasons to believe that the market may still hold. I don't want to get there. I don't even want to come close to this scenario. I don't want this market to get down, frankly, below that neckline of 403. I'd love to see it close the gap, bearish engulfing or not, and then turn back up again, and that'll be obviously next week. Today's Friday. So I'm resigning myself to an outside down day. We're down 1.98, and that's potentially premature. Hey, enough time spent on the S&P. But I'll tell you that we did make a low. This is the 1 minute chart. We did make a new low. Just a second. New formats here. A little after 10 o'clock. And again, this is 10:45. So we might have started to work our way up. I can't tell too soon. Let's go to the DIA. And here we have the daily chart on the DIA. I'll put in all my little fancy colors and trend lines over the weekend. That goes for the QQQ as well as the Russell 2000. And then we're going to cover commodities. Okay, outside down day at the moment, we are one tick lower today than yesterday's low. Technically, that makes it a bearish engulfing because the high is obviously on the opening higher than yesterday's high. We don't have a head and shoulder here because the neckline would be downward slanted too much. We simply have lower lows and lower highs starting barely. And there's a lot of reasons to believe that the market could hold at various levels a little under where we are. So we can accept a bit of a break without changing our minds about being bearish long term. We don't want to do that. I think October 13th was it. So we're beginning a little bit of a process to test that October 13th low as being super profound. And on the 1 minute DIA chart, you can see here that we are starting to work our way back up a little bit, but again, nowhere near enough to be convincing. I'd love to see it turn around and go higher than yesterday's close. That would be great. And what would even be better is to go all the way back up and make new highs for the day and close strong above this morning's highest high. Next symbol is, let's go here. Okay, the Russell 2000 is interesting. On the daily data chart, we have closed the gap almost, leaving a few ticks left. That was made a week and a half ago. That's the equivalent of some of the other gaps on the spider that's still down at 96 and so on. So no more reason really for the 2000 to come down anymore. And look at the fact that it's had an incredible 1 year major historical price level starting basically around 170, and we're 172 at the moment, all the way down, of course, to the broad double bottom in June and October of last year. And that's around, let's call it 162, 163. So it's a super huge support area that is immediately under where we are. Even though we have an outside down day, there's a gap that's closed. And you know, bearish engulfings are by themselves are an important part of the Ehrlich reversal technique, but I use other filters. And this doesn't impress me as being particularly bearish for the Russell 2000. I don't like it on the spider because that's the last shoulder high. Okay, a couple of quickies here. How about silver? I told you. Look at this. You're not going to find this for a long, long time to come. We have a double top formation in the silver market. Both of the highest highs, which are super close together price-wise, are bearish engulfing ER sell signals. They turned red. And that would be April 14th and just a few days ago on May 5th. But a few days after May 5th, yes, 2 days ago, May 10th, we had another bearish ER sell signal, and that was the nail in the coffin. And I think I actually said that on that day, that phrase. I think I did. The next day, we have a sell signal, ER3, new short, and it collapsed, making new lows for a month, coming down a huge amount. And today, the next day, we have some more downside follow through. All right, problem short term. I'm super happy about this configuration and trade and all the combinations involved. We're oversold. Don't run after a market going short when you're in oversold condition. It'll probably very soon be higher than where we are at the moment. And that's 24.13. So I'm thinking we're going to come back up again to approximately 24, maybe 25, low 25s, and then turn back down again. But this looks great. The minimum downside objective on the double top formation, and I'm just eyeballing this at the moment, but I'm going to be fairly close, I think would be 23 flat. So there's elbow room, and that's just a minimum downside objective. I would not be surprised to see the lows. By the way, we got a buy signal at the bottom to be challenged in a couple of months. Next chart is a quickie on IPG. We had a buy signal a couple of days ago. It's worked great. It's come up very, very nicely. But the point, the why I'm showing you this right now is that we opened below our bid and got filled close to the low of yesterday. And it closed with a nice profit on the first day. Now, this morning, it made a high significantly higher, but watch what happens when I'm showing you the 1-minute chart. Look at this. IPG had a trailing STS automated trace, the yellow line stop, jump significantly this morning and is now locking in a profit of significance, at least 55 cents. And again, this is a $36 stock, and it's only on the second day. Doing great, despite the fact that the stock market is down on the S&P 220. This is still up on the day, a quarter, not a lot. Next one real quick here is going to be Val, and then we'll get the futures. We bought it yesterday, not too great. It was a loss early, came down close to our yellow stop, rallied, but then again, it came down almost. Hey, this is horseshoes and hand grenade, doesn't count. You have to be exact. So we missed getting stopped out by a tick or two. It closed with a losing position. This morning, it opened so much stronger that it got extremely overbought on a short-term basis, started to give us scalping red sell signals, and the STS stop jumped so much that we turned a losing trade into a profitable trade, and we're out with approximately $1.35 in 24 hours on a $58 stock. Commodity futures now. Here we go. The S&P 500 I always start with in form of the E-mini, which is a futures contract as well as a stock. Please notice that we don't have a bearish engulfing on the E-mini. That'd be the micro or just the ES. And that's because yesterday's off hours, so to speak, was higher than the S&P yesterday's high than the S&Ps. So the S&P, SPY, was able to get above yesterday's high early and then go down. We didn't do that on the ES. No sell signal. Now, the pattern is basically still there, the head and shoulder. That's basically the most important thing. But there's super support below the market. This can be construed as just a minor downside correction that if it works, I don't want it to, may last a week or two. And it is already around 50-40 on the RSI, so it's going to get oversold pretty soon if it starts to nosedive a bit. Next chart is OJ. Coming back to the crux of an old pennant and oversold. I think it's going to turn around and start to go back up again soon. Next, we're going to go with Cocoa. Cocoa has a bearish engulfing today. It is a brand new sell signal. It was overbought the last 3 days, so I love this. This could be the beginning of a big retracement to the downside, maybe 2,800 or lower. Brand new sell signal. Keep your eyes on Cocoa. Next, we've got the natural gas having a brand new buy signal today. It's an outside up day, bullish engulfing. We have a support area that it was broken and it's refused to stay under it for more than just a couple of days. And now this buy signal. we may be forming a bottom here of some sort. Keep your eyes on this. I'm obviously turning bullish, which I first time in quite a while in natural gas. Next one is heating oil. Now, I can't agree here. We got oversold. We rallied, which it did, into resistance, which was pretty forecastable. And now we're starting to head south for a day and a half. Not oversold. I think we're going to challenge the lows of the move, this major support area at 2.1. So we'll see soon. Bearish a little bit on heating oil. Next chart is live hogs. We had a buy signal a few days ago. It didn't get ruined. The market is approximately unchanged at the moment. I'm looking for more rally. I think we've got a low that we bought into adequately, not great, a few days ago. So let's see what happens with this particular trade. Friendly, not super bullish. The trend is against us. Next, silver. Talked to you about that double top a little earlier. It's working great. Bond market. We have a sideways trading range. We're between a rock and a hard spot. We've got a major resistance area, the red band at the top that we can't get through yet, although I think we're going to do that in the next few weeks to maybe it'll take 2 months. So I am intermediate to long-term bullish, period. The support level, short term, we've challenged a few times here in the last couple of months, and it's held up really well. It may not forever, but it doesn't necessarily mean that there's be a big, huge bear market move. We've got more support under the market than, in my opinion, the resistance above, and we have lows that have been rising for quite a while with a flat top. That defines a flat top right triangle, and the flat sides of those things are usually broken. So I'm bullish. And the same thing goes for the 10-year notes. All those comments. Next, crude oil. Bear trend, looking for lower levels, was oversold, bouncing back somewhat. Gold. You know, we bought the low in gold, platinum, and silver back in February, March, and now it's got problems. I can't define a specific problem, pattern, at the moment, but if we get below and close below 1980, that's going to be a downside breakout for about a 2-month time frame. That'll be pretty bearish. I didn't get any sell signals yet. I'd love to. We'll see what happens. Next. Coming down pretty fast on platinum today, and double top potential. The first and the highest high was overbought. We corrected the problem, came back up, and it couldn't make and didn't make new highs for the trend. And now we're actually challenging the lowest low between those two highs, which is the breakout point. If this is a double top formation, that's your breakout right there at 1040. And the downside objective would be in the neighborhood of testing the lows that we had back in February. Plus, there's a danger of a major, huge, broad double top formation of platinum over a long period of time. So, next chart, high-grade copper. Broken to new low ground. On breakouts, it's oftentimes when markets do get overbought, oversold that same day. So you kind of have to give it some extra elbow room because it's not uncommon and it doesn't stop the breakout. The breakout's the more important part. So we got oversold to the downside, and now we're up a little bit for the day. If there's a rally up to 38.25, I'd be looking for new short sales. But I think the trend is down, and I think we're going to see lower lows very soon. Next, soybeans. Pretty much the same commentary. Major historical resistance stopped the rallies, and that's been for a long, long time. Are we talking 2 years? Darn near it. Yeah. Anyway, a very long period of time. And so I think that the lows that were made at 1375 are going to be broken, and it's going to drop off and break these maybe lows that we had lower and lower. Interesting. My last buy signal didn't work very well. It did make a little money for a few days, and that's all you need with my system. You already saw an example where 24 hours was plenty. Even a few minutes sometimes provides us with profits. Next, new low and a new low close for soybean oil. The previous buy signal lasted 3 days and was pretty good, but again, not huge. Okay, so I continue to be bearish in soybean oil, but we're oversold again. So it's going to zigzag its way down, apparently. Next chart is soybean meal. I think it's going to do the same thing soybean oil has done, and maybe start now, because the high today is up against some resistance where it stopped going up or down before. That'd be classic. Looking for new lows very soon. Next, corn. We had a buy signal a couple days ago, didn't work out. We're trying to bottom out at support. Today's new low is for the last 5 or 6 days, and we're higher on the day currently. An effort for support to hold, which it is, but we don't have any upside breakout. You need to close above 601.5 before we get any convincing strength follow through expected, and that's not happening. The trend is down. The rallies have stopped at lower and lower and lower levels over time, and all we're doing is bouncing off support for the moment. I think next week we're going to see this blue line be broken. Next, wheat. Buy signal worked for a few days. That's all you get in bear markets that continue to be bear markets, and that's exactly what we got here. So I think I'm going to see new low ground for the grain markets in general, and real soon. I got to point out that this unbelievable, spectacular ER sell signal at the top of the market on March 8th of 2022 is something you won't see maybe once every 10, 20, 30 years. It's unbelievable. It reminds me of the Russian grain deal markets in 1972, 73. I started in 71, so I lived through it. Next, live cattle. Just a little zigzag correction in a bull trend. No pun intended. Next, sugar, minor double top possibility. Can't say too much about it. Trend is up. Got to wait a day or two. E-mini, we've looked at it inside and out. You have a great day. Thank you. See you Monday. Have a great weekend.